Hey everyone, and welcome back for another deep dive.
Yeah, glad to be back.
So, we've been hearing from a lot of you about student loan forgiveness and all these programs that are out there.
Mm-hmm.
And it's got us thinking,
Right.
there's a whole side to this that maybe people aren't really thinking about right away.
Yeah.
And that's like the tax implications.
Mm-hmm.
It's kind of, I don't know, it's a bit of a bummer to think that,
Yeah.
you're getting this like huge relief, finally getting rid of this debt.
Yeah.
But then, potentially you could be hit with a pretty big tax bill.
Right. Yeah. I mean, nobody really wants to think about taxes when they're celebrating, right? Getting rid of debt. But unfortunately, it's a really important thing to factor in, to
Yeah.
make sure that you're really getting the full picture of what that relief looks like for you.
Yeah, absolutely.
Because it's not always as straightforward as it seems.
Right. And I mean, we were looking at some of the numbers that you shared with us, and I mean, it's a lot of people potentially that this could affect.
It is. It is.
Just to give you a sense, like as of the end of last year, like 2024,
Mhm.
over 1 million borrowers
Wow.
got like $79.4 billion in forgiveness
Yeah.
through the PSLF program alone.
Just through PSLF, that's amazing. Yeah.
That's just PSLF. So, I mean, and that's just one of the programs.
Right.
So, this is something that could potentially impact a huge, huge number of people.
Yeah. And I think, you mentioned kind of the bummer aspect of it.
Huh?
And, you hear this term sometimes thrown around, student loan tax bomb.
Right.
And, as dramatic as that sounds, it can really feel that way if you're not expecting it.
Yeah,
Right.
exactly.
Like you think you're free and clear,
Yeah.
and then all of a sudden you're hit with this big tax bill.
Yeah. So let's break this down for everybody.
Yeah.
So, starting with just like the basics,
Uh-huh.
what is the general rule when it comes to the IRS and canceled debt?
So the general rule is that the IRS views canceled debt.
Mm-hmm.
And that includes most types of student loan forgiveness as income.
Okay.
For you, right?
Right.
So their reasoning is that essentially you've received that amount of money or
Yeah.
benefit without having to pay it back.
Right.
And typically any form of income is subject to taxes.
Okay. So that makes it, they see it as income, so therefore it should be
Yeah.
taxed accordingly.
Yeah.
But I know in recent years there's been some relief from that for a lot of borrowers.
Right.
So can you talk a little bit about that?
Yeah, so this is really important for everyone to understand.
Mm.
The American Rescue Plan Act of 2021 put in place a provision
Okay.
that actually made student loans that are forgiven
Okay.
exempt from federal income taxes.
All right.
But this is really key. This is a temporary window, and it's specifically for loans that were discharged between January 1st, 2021
Okay.
and December 31st, 2025.
Okay. So we're quickly approaching the end of that.
We're in 2025 right now.
Yeah.
So that period of this kind of broad federal tax relief is coming to a close.
Okay. So that break that a lot of people have gotten used to
Yeah.
is not going to last forever. And it's also important to note, right,
Yeah.
that federal exemption
Yeah,
doesn't automatically apply to state taxes.
that's right. Yeah. So,
Hmm.
the federal government kind of put this in place,
Yeah.
but individual states still have the authority to make their own decisions.
Okay.
And so as of now, as we're recording this, there are 5 states that actually do tax-forgiven student loan debt.
Okay.
And those are Arkansas, Indiana, North Carolina, Mississippi,
Got it.
and Wisconsin. So if you live in one of those states,
Hmm.
it's an additional thing that you need to consider.
Yeah, absolutely.
Yeah. Do your research, find out what applies to you in your specific state.
So 2025 is the big year
It is the magic year.
where this kind of temporary relief runs out.
Mhm.
So let's look ahead then, to 2026 and beyond.
Okay. Yeah.
Because, obviously this is going to be a big question on people's minds.
It is, yeah.
What happens after this relief expires?
Yeah.
So let's go through some of these different forgiveness programs
Okay.
and, really lay out what people can expect.
Okay, that sounds good.
So starting with, we talked about PSLF before.
Yeah.
Public Service Loan Forgiveness,
Mm.
which, has provided a lot of relief to a lot of borrowers.
It has, yeah.
What's the tax situation there?
So PSLF is kind of unique
Okay.
in that it's permanently exempt from federal income taxes.
Oh, okay.
So even after the American Rescue Plan expires, this is still going to apply.
Got it.
So if you're somebody who's working in public service
Yeah.
and you qualify for PSLF, that forgiveness that you get is not going to be taxable
Oh, that's good.
as federal income.
Okay, so that's a pretty big,
Yeah, that's a significant benefit.
in there. Okay, what about teacher loan forgiveness?
So teacher loan forgiveness also has a favorable tax treatment.
Okay.
So as of January 1st, 2021, the amount that's forgiven under the TLF program is not considered taxable income by the IRS at the federal level.
Okay, so that's another one where
After a win.
there's no tax hit on that.
Exactly.
Okay, cool. Now let's talk about income-driven repayment plans.
Okay. Yeah.
So these are plans, where your monthly payments are based on your income. And, a lot of people are enrolled in these.
They are very common, very popular.
Yeah. So what happens when, you reach the end of your loan term under one of these plans and, any remaining balance is discharged?
Yeah, so this is where things get a little bit trickier.
Okay.
And this is where potentially you could see those taxes coming back into play.
Okay.
So under the American Rescue Plan, again, temporarily, any balances that were discharged after the loan term, which could be, 20 or 25 years, depending on the specific plan.
Yeah.
You've got income-based repayment, income contingent repayment, pay as you earn.
Yeah.
So all of these, they have different kind of terms. We're exempt.
Okay.
But once that exemption expires at the end of 2025, those forgiven balances are very likely going to be taxable as income, both at the federal level and potentially at the state level.
Got it.
So this is, if you're somebody who's in one of these IDR plans, it's really something that you need to think about.
Yeah, absolutely.
As you're doing that long-term financial planning.
True. So, yeah, you've got to factor that in potentially, a big...
Right. Could be a significant tax bill down the road.
Yeah. Okay, so what about borrowers who get their loans discharged?
Okay.
Through, the Borrower Defense to Repayment Program.
So this one, there's actually some good clarity here.
Okay.
So the IRS and the Treasury Department have both said that if you get your loans discharged through Borrower Defense, that's not considered taxable income.
Okay, so there's no tax hit there.
Exactly.
Okay, good. That's good to have some clarity around that one. Okay, so let's move on to total and permanent disability discharge.
Okay.
So this one I feel like is maybe a little more...
Yeah, this one's a little more complicated.
Complicated.
Yeah, because the timeline is a little bit all over the place.
Okay.
So when we're talking about federal taxes, if your loans were discharged before January 1st, 2018, then yes, that was taxable.
Okay.
But if they were discharged between January 1st, 2018 and December 31st, 2025, then you're good. It's exempt because of that temporary relief.
Okay.
But here's the tricky part. If you're getting a TPD discharge in 2026 or later, the tax treatment is actually currently unclear. So it's a wait and see kind of situation.
Yeah. So for anybody in that situation, it's like...
Stay tuned.
Yeah, we'll keep you posted.
Exactly.
But definitely something to keep in mind.
Yeah, and keep in mind also state taxes might apply.
Right, depending on
where you live.
Where you live.
So always check your state's specific rules.
Okay, so we've covered the federal loans. What about private student loans?
Okay, so private student loans, the situation is a little bit similar to federal loans.
Oh, wait.
Right now, if you have private loans forgiven through the end of 2025, you're exempt from federal income taxes, thanks to the American Rescue Plan.
Got it.
But again, like we said, there might still be state taxes.
Yeah, so that's always a...
Always got to check.
Yeah, got to check that out.
So it's a similar thing. Unless there's an extension of the American Rescue Plan, most likely those discharged private loans are going to be taxable as federal income starting in 2026.
Okay, so that's a lot of information. And I think,
it's a lot.
People listening are probably like, thinking through their situation. And I'm sure there are some questions coming up.
I'm sure there are.
So, like, one question I could imagine, someone thinking is, should I just try to pay down my balance now before forgiveness happens so that if I do get hit with that tax bill, it's smaller?
Yeah, that's a really common question.
Yeah.
It makes sense, right?
Yeah.
You wanna try to minimize any potential tax liability.
Right.
But it's not always that simple.
Okay.
So technically, yes.
Yeah.
If you're facing a taxable discharge after 2025, paying down your balance is going to lower that tax bill.
Yeah.
But the catch is, if you're in an income-driven repayment plan, paying down your balance could actually lead to higher monthly payments down the line.
Yeah.
Because remember, those plans are based on your income.
Yeah, right.
So if you pay down a big chunk, your income stays the same, but your deck's lower. Yeah. They might say, okay, well, now you can afford to pay more each month.
So it's like a double-edged sword, kind of.
It is. It's a trade-off.
Yeah. So you really got to think about that.
Yeah, and it really depends on your individual circumstances and what your goals are.
Yeah, okay. Another question I bet people are thinking is, like, how do I even figure out how much am I going to owe?
Right. How do you even estimate that?
Yeah. If this forgiveness is taxable, what am I actually looking at?
So that's a great question. And the amount of tax that you owe is going to depend on a couple of things.
Okay.
One is the amount of forgiveness that you get.
Okay.
And the other is your individual income tax bracket.
Right.
In the year that you actually get that forgiveness.
Okay.
So a good starting point for you is to go to the IRS website.
Okay.
They've got all the current income tax rates and brackets.
Yeah.
That'll give you at least a sense of, what percentage of that forgiveness might be taxable.
Okay, so that's at least a starting point to...
A good place to start. And then, if you're thinking, I might be looking at a pretty big tax bill. It's always smart to start setting aside some money, just in case. Maybe put it in a high-yield savings account or a CD, something like that.
Yeah, get ahead of it.
Exactly, yeah.
Okay, last question.
Okay.
What happens if, Congress decides to extend the American Rescue Plan?
Yeah, what if they say, you know what, we're gonna keep this going?
Yeah, past the end of 2025.
Past 2025.
How does that affect borrowers?
So that would have a pretty significant impact if they extended it. Basically, it would mean that borrowers who are looking at forgiveness through these IDR programs, through TPDD for discharges in 2026 and beyond, and private loan forgiveness programs, they would continue to be exempt from those federal income taxes.
Okay.
So it would be a big relief for a lot of people.
Yeah, it'd provide a lot of certainty, too.
It would.
Just knowing.
Yeah, take away that uncertainty.
Yeah, okay. And just to reiterate, PSLF is not affected by this.
Right.
Because it's already
got that permanent exemption.
Permanently exempt.
Exactly.
Okay, cool. Well, this has been a really, I think, helpful...
It's complicated, but hopefully we...
Yeah, no, it's a lot. But
we broke it down.
It's complicated.
Yeah.
And I think it's helpful to go through all these different scenarios.
Absolutely.
So to sum it all up, student loan forgiveness, it's amazing.
Yeah.
It could be life-changing.
Absolutely.
But there's this whole tax implication side of it.
Yeah.
That you really, really need to be aware of.
Yeah, don't just celebrate the forgiveness. You got to understand, what are the potential consequences down the line.
Yeah, and it really depends on your individual circumstances, right? What kind of program you're in when you get the forgiveness.
Exactly.
Or a lot of factors.
It's not one size fits all at all.
Yeah, absolutely.
Really got to, take a look at your own situation.
Okay, so final thought, to leave everyone with, you've got this, relief coming, hopefully.
Yeah.
Which is amazing, know. But
yeah.
It's worth thinking about that long-term planning, too.
Yeah, right.
Potentially, having to address this tax liability.
Yeah, especially because things can change. You know, we've seen that laws can change, regulations can change.
Exactly.
So, you got to stay informed.
So stay informed, keep an eye on what's happening with the American Rescue Plan, if it gets extended, if it doesn't. All those things are going to affect your bottom line.
That's right. Long-term planning is key.
Absolutely. Okay. Well, thanks for walking us through this.
Of course. Happy to help.
And thanks to everyone for joining us on this deep dive.
See you next time.
Until next time.
Bye.